Hello, and welcome to myfinancesteacher.org. I'm traveling at the moment, so can't make too many of these videos, not enough time for that, but I'll try to get back to regular schedule in early February.
Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot.
In this video, we're going to look at gold, and the intermediate cycle is still relatively young. We started the ongoing intermediate cycle over here near the middle of November, and judging by the action over the last week or so, it looks like the first daily cycle, the first short-term cycle within the intermediate cycle, finished over here in the middle of January. So that gives us just over 2 months for the first daily cycle, which is a regular duration for these short-term cycles. And a nice sign that we saw on Friday on gold is that it stayed convincingly above the previous intermediate cycle high of 1560. As you see over here, over the week, gold was trying to break above that level. And finally, by the end of the week, it did so relatively convincingly with a close at 1571. As I mentioned in one of my previous videos, I was selling a small part of my precious metals related portfolio, just about 20%, near this Iran scare. And as I mentioned in one of my comments, in one of my replies to one of the viewers' comment, over the last couple of weeks, I went back to 100% allocation in my precious metals portfolio. So now I expect the second daily cycle within the ongoing intermediate cycle to give us a higher high. It's hard to say how high will gold go in this second daily cycle. 1650, for example, seems to be a reasonable round number. On the other hand, looking back at gold's price history to look for potential resistance zones, one of the previous lows that we saw many years ago was here at about 1625. So from current prices, 3.3% or 5% gain is very likely, in my opinion, over the next couple of months within the ongoing short-term daily cycle. And these gains might actually be amplified in silver and gold miners, as those usually outperform gold, which hasn't happened yet within this intermediate cycle. As we see, gold is already above the previous intermediate cycle high at about 1560, whereas silver hasn't even reached its previous intermediate high, which was at about 19.6. And the current silver price is at about 18.1. I do expect silver to break the previous high within this intermediate cycle, but that might probably happen a little bit later once the general public realizes that gold is actually doing well and we see more money flowing into all sorts of precious metals. Same thing on gold miners. GDX so far hasn't broken above the previous intermediate high, which was at about 30.9. Additionally, within the ongoing intermediate cycle, RSI on GDX hasn't even dipped yet into overbought territory. So I think there are still nice gains to be made in all of these precious metals related assets within the advancing phase of this intermediate cycle. Of course, in the very short term, there is also a chance gold dips temporarily, say below this 20-day moving average, that's the red line on the chart. Say if over the next few days FOMC manages to push the stock markets out of the short-term daily cycle low, that might hurt gold a little bit. But even then, I think within this short-term daily cycle, we should see at least a double top above 1600 over the next couple of months. So I'm personally still holding gold and silver ETFs as well as gold and silver miner ETFs. I think we should do well over the next couple of months. And with this, I wish you all the best and good luck in your trades.